Let's also get in Pankaj Murarka, CIO at Renaissance Investment Managers. Pankaj, welcome to the show, and a day to actually, look back at as well, because last week we've hit record high levels. On a Monday morning, for obvious reasons, we've seen markets open at record high levels. Once again, where from here?
Well, I think markets are fairly poised because we're coming out of Indian markets are coming out of 1 year of consolidation, where last 1 year returns are markets have been flat, and the economy has now demonstrably shown a cyclical rebound from the slowdown that we witnessed in second half of the year. And on top of that, we've had a significant amount of stimulus that has been infused into the economy across rate cuts done by RBI and GST cuts and tax cuts which happened in the early part of the year. So I'm pretty hopeful that we'll see a meaningful recovery in demand in the economy in the second half of the year. Valuations are now much more reasonable at 20 times 1 year forward earnings, which is pretty much in line with India's long-term averages. So I think while India has underperformed this year in relation to global markets and regional markets, but I'm with the view that next year could be India's year, because markets globally or investors would look at sustainable growth, and India clearly stands out in that context. And the fact that the low point of the cyclical slowdown is behind, and now with the second quarter GDP numbers, it confirmed that the economy has shown a sharp cyclical rebound. So I think I'm reasonably positive markets from here on, if one were to take a 1 year's view.
Pankaj, morning, Alex here. I know that you look at the IT space very closely. I'm just wondering whether, with the sentiment turning seemingly in the Indian equity markets, whether you think a rotation will take place into IT, for example, and where would you be looking if you were to build out a portfolio right now, or if you were to bolster your portfolio right now? I'm not talking about yourself, I'm talking about our viewers tuning in, if foreign institutions come back to the fold with the sentiment improving.
Morning, Alex. You're right. I've been constructive or positive on IT through this year, and while it has not worked this year, but I certainly find a lot of value in these companies. More importantly, I think the one big or mega trend that's driving globally is this year has been a year where the outlier performance has been driven by AI stocks, which essentially includes the semiconductors and the companies which are building foundational models or hyperscalers. But now I think from all the data points I see, AI is getting into, we're seeing sharp pickup in AI implementation, which is where Indian companies or the service providers have a big role to play. I certainly see demand and growth improving for IT companies going into the next year. I find them extremely attractive for an investor having a 2 to 3 year view. From a viewer's point of view, they should logically build a portfolio of probably some large caps and mid and small cap, because I think the upcoming wave in terms of demand growth for the sector over the next 2 to 3 years will be so significant that companies across the board will benefit out of it. I see a very significant mega trend in terms of demand revival for IT in the next 3 to 4 years.
Okay, Pankaj, the other question is, and good morning, Neeraj here, is that if the trade announcement doesn't happen while we are at all-time highs in the month of December, do you reckon the markets can continue doing well despite that one major, how do I say, for lack of a better word, hurdle for the markets sentimentally still being out there?
I still think so that Indian markets will still do well. Maybe probably we'll have to moderate our return expectations. It will be good to have a trade deal because it does have an impact from an overall top-down perspective on narratives in terms of driving flows. The economic impact of higher tariffs India can weather that shock very comfortably. But even building in, let's say, some headwinds because we don't know even if a trade deal happens, what the final shape of the trade deal. So even building in some headwinds from trades going into next year, I still think India is a good to 7% growth story, which is very sustainable over the medium term to long term. So India becomes a compelling asset class for any investor having a slightly more medium term, long term view. And I still think that irrespective of the trade deal, markets can do mid double digits or low double digit returns from here over the next 1 year.
Okay. Pankaj, on that note, thanks so much for joining us this morning. Pleasure speaking with you.